I should say congratulations. It looks like it's pretty good. The stock's responding in kind. What's driving it?
Yeah, thank you, David. Yeah, we had a very solid first quarter of our fiscal 2020 year. Our net revenues were up 19%. Our adjusted EBITDA was up a little bit more than 9%. And really what's driving it is retail outperformance by our company and our brands in the RV market here in North America, and that's ultimately driving the financial results as well.
So your financial results were a little more complicated because you have had an acquisition of Newmar. Bring us up to date on exactly how that's going.
Yeah, on November 8th, we closed on the acquisition of the Newmar Corporation. Newmar is one of the more iconic luxury high-end motorhome manufacturers here in the United States. Just a tremendous business, great leadership team, great products, dealer relationships, and passionate end customers. And for us, it was a very complementary acquisition in that we have a tremendous flagship brand in Winnebago. However, that brand in the motorhome segment is not as successful on the very high end. And so Newmar's been taking share, they've been making great product, and the opportunity to bring them into the fold really strengthens our motorhome segment, allows us to reach a more affluent customer that, candidly, in these times economically, is a little bit more resilient.
We're speaking with Michael Happe. He's the Winnebago Industries CEO about his earnings. So with this acquisition of Newmar, we always ask the hackneyed question, what is 2 + 2 = 5? Is it synergies, which is often a euphemism for saving money, often with people? Or why is the sum greater than the sum of its parts?
Yeah, we think there'll be synergies certainly on the cost and material side of the equation, and our teams will aggressively look for those and work together to find those where appropriate. But we also believe there will be strong synergies in terms of the transfer of best practices around the value chain of the business. It could be in product development, and could be in dealer relationships. It could be in aftermarket service. Newmar is just simply a high-quality business that we get to learn from now, and we think it'll make the other part of our motorhome business, the Winnebago branded company there, much more stronger as well. So yeah, we do hope for that 2 + 2 = 5 equation.
So once again, we're talking about a successful quarter for Winnebago Industries. How much of that was gaining market share? How much of it was the overall market expanding?
Yeah, the market here in the RV industry within North America within the last year has been down slightly on the retail side, probably mid-single digits versus 2018. And the wholesale side has been going through a bit of an inventory normalization process in the field. Winnebago Industries, fortunately, and the success of our brands has been outperforming the industry at retail by around 10 percentage points. So if the industry's down -5, we've been tending to run at +5 or even greater at times. And that's because we're really focused on product quality, valued innovation, and fantastic customer service. And that proposition in this day and age seems to be resonating more and more with our dealers, and certainly resonating with end customers. So the industry's doing fine, but Winnebago Industries is currently doing better.
Mr. Happe, how do people finance these things? And I'm asking that question because I'm wondering whether historically low interest rates are helping your company and perhaps the industry.
Yeah, certainly interest rates and the access to financing during the retail process are important elements. I would say probably more than 55–60% of the RVs are financed in some way. We can't always see the source of that financing directly, but subsequently the interest rates on that financing is important. They result in monthly payments for the consumers. And so when the Fed was raising the Fed funds rate, a year or so ago, and they did that about 5 consecutive times, that actually probably did have a little bit of a slowdown impact on our retail environment within the industry. However, now that the Fed has come back and made some adjustments to that rate and seems to be looking at a more stable rate for as we get into calendar year 2020, we think that that helps the consumer feel more confident in terms of what those interest rates will be and subsequently what those monthly payments will be.
Everyone in the business world, and for that matter in the financial markets, is really focused on the U.S. consumer. It's something like 68% of the total economy. You have direct dealings with consumers. What are you seeing in terms of their appetite? Is it staying the same? Is it growing? Is it diminishing?
Well, I think overall the U.S. economy is certainly right now very much on the backs and the shoulders of the American consumer. I mean, they are bearing the weight of the good things that are happening. And so being a consumer discretionary business, as you said, we certainly interact with those consumers very directly. In our business, it's a little bit more of a want versus a need. I would argue that the consumer has been a little bit stronger in some other areas of the economy recently than the RV industry, but we're still on pace in 2019 to have one of the top 5 retail years in the entire history of our industry. So the consumer may have let their foot off the pedal a little bit in terms of interest in our products, but not substantially.